to meet both employers and employees in terms of running programs and encouraging people to save.
So I just summarized the investment performance. Strong asset growth, 1.136 trillion as end of December. Good investment income, gross investment income, 67.4 billion. ROI maintained above 6% at 6.36, and it is stable in a 1-year, 3-year, and 5-year basis. It's the highest dividend payout in history at 57.8 billion. And we pay out everything. Everything that we generate, we distribute to members. That is the principle of EPF. So the dividend is 5.5% for Simpanan Conventional against 5.35% last year. And for Simpanan Syariah, it's 5.4% against 4.75% last year. So this meets all of our investment objectives in terms of 50 basis points above MGS. We generated 118 basis points above MGS. 2% over inflation. We generated 2.89% over inflation. And similarly, same story for Syariah.
It just occurred to me that your dividend rates for both Syariah and conventional, they started to converge currently. I'm sorry, could this give us a color of it? And a lot of analysts are expecting 6%. Why more?
They converged because, in particular, and if you look at financial markets, stock markets, equity markets in particular, and in particular in the US, a lot of the performance was driven by what's called the Magnificent Seven, which are the largest, the 7 tech companies, including, of course, the stellar, which is NVIDIA, driven by generative AI. A large number of technology companies are Sharia compliant. So therefore, because these were in the Sharia portfolio, we saw that increase in returns in the Sharia portfolio, right? It doesn't mean that there's going to be full convergence. It doesn't mean that it will be the same. Depending on year, one is inevitably going to be higher than the other. But we do try to manage it such that we are getting the returns and meeting our return objectives. Again, return objectives is 2% over inflation, minimum 2.5%, and 50 bips over MGS. So that is our objective. Going back to market expectations, market will continue to expect based on what they can compute. If you look at our quarterly results, it's actually quite predictable. So if you go back to Q1, Q2, and then you aggregate Q3, Q4 is not far off from what was disclosed. So the portfolio is also constructed so that there is that stability of income year on year, and to some extent quarter on quarter, although that's going to be a bit more volatile, but it's actually not far from what we have disclosed in Q3.
Right, members of the media may take this moment to take a photography session.